All right, gang, welcome to our first forward focus of the new decade, 2020 already. So happy New Year, everyone just joining us. What we usually do with the first forward focus of every single year is we go and look at the bigger picture. And I mean all the way back to the start of the indices themselves. So I will pull up inflation adjusted charts. We'll take a look at where we are at on that bigger picture and what those technicals are telling us. Now, this session might be a little bit longer than normal because we go through a lot more stuff than we usually do. We're going to look through not only the main indices, we're going to look through the main currency pairs, and we're also going to look at a lot of your favorite securities. We're going to look at bonds, gold, oil, all of that stuff today. So I'm actually going to start up my trade station in the background too, if we need that for anything. But let's flip on over here. And the first thing that we're going to look at, see here, the first thing we're going to look at is the inflation adjusted chart of the Nasdaq. So let me go and grab my web page for that. So I'm going to pull up this all years chart here. So what you're seeing here is basically the chart of the Nasdaq all the way back to the beginning of the 1970s. And this is adjusted for inflation. So what we saw as we were heading into 2018, see right here, I'm going to go and mark that. We were looking at a level that the market was really extended on these inflation adjusted charts. We had this move coming off of basically a two-wave correction here. Momentum had been increasing, pulled back the first time. We'd already seen two main moves up and a third move. Now, for those of you that are in League of Traders, we've actually talked about this specific pattern a number of times over the past year, where when we get this pullback here, where it's a really strong pullback, but the market doesn't go into an avalanche. Instead, it manages to hold and pull back up. A lot of times this pattern, what it will do is it will look like this. It'll look like it comes up, pulls back, kind of goes for like a 2B type of formation, pops up. It's pretty common for that to actually penetrate this previous high here. And many times it will do it with increased momentum. So it will go like that and come up, and then it will lead into a correction after that point. But we usually see it go through this previous high. So this happens a lot on stocks that are moving on news. And this is a little bit different in that this second pullback here is actually pretty strong on the inflation adjusted chart when we were dealing with that correction here. That's not always as common. So a lot of times it will look more like a 2B. It'll kind of roll over a little bit more off of the lows, but it's coming off of that second low that we'll see this happen. This went into a tilted phoenix here. So we had the two-wave pullback and then the phoenix portion, which basically it's a tilted inverse head and shoulders, where this is your shoulder, this is your head, and this is your other shoulder. So it's part of that tilted phoenix. That's also part of that tilted head and shoulders, which is basically taking your head and shoulders and just turning it to the upside. So that's what we've got going on here. Then it came up, did your measured move, then had a smaller, shorter pause, and another move up. So when we were heading into 2018, what we were looking at was a period where it was likely that we would start to see some bigger corrections again setting in. And that's what we've been having here over the last couple of years, where it's basically shifted at that high. We've gone into kind of this megaphone formation here, but we've been in a corrective phase of the market, which a lot of people don't think about because they're like, oh, but we're hitting brand new totally new highs on the Nasdaq. Yes, but we're doing it within the realm of this correction that's taking place. So just like this is a tilted correction here, this entire period, we have been dealing with a correction over the last couple of years within this bigger megaphone. And we're just coming up to the upper end of that level. When you look at the time development here, it's pretty comparable time development that we've seen over the past, some of these previous corrections, just really similar time development. So this is where we're basically at a do or die point for the market right now. It's coming up, it's trying to do this kind of larger 2T-ish formation on these bigger charts. And it's basically coming into that zone where we're looking at that measured move. We talked about this just before we went into the holidays in our forward focus. Our last forward focus was a couple of weeks ago before our holiday break, but that's where we were coming into, was basically trying to do this 2T up here. Now, our last month on this goes by monthly on this chart. So our last month was the end of December. So we're not actually seeing even that continued push here that started kicking off the new year. But what we're looking at is this move here. And what you'll notice is that when we're looking at the distance between the highs, this is a little bit wider here than it is here. So that leaves us with the possibility that this could try a 2T. The momentum is a little bit on the stronger side though. So the other possibility is that this tries to go for a third push, where this is basically your first push coming out of this tilted phoenix. So if we're looking at the time development on the tilted phoenix, you're looking at this. So this correction's shorter. This correction is shorter. So this could even be counted as 1, 2, and then the potential for that third move is here. But it's more iffy because that distance on this breakout went a bit faster than between these two highs. So it leaves two possibilities versus more of a one core possibility. When you have the distance between those highs being more comparable when it tries to break, then your probability is highest that it's going to go for a measured move. So this move to this move will be more even. So it might have a little bit of resistance when it goes for the smaller measured move here to here, but it's easier to break through that, especially if this pulls up into a 61.8% extension of this move here. So if it comes up here, comes up, goes to the 61.8, it's more likely to go that 100%. But if the distance is shorter, let's say it tries to go here, then the first main resistance you have to watch for is the smaller measured move here to here. And that's what we're dealing with right now on these larger charts. So we are at a point on this larger inflation adjusted chart where certainly we were dealing with that resistance and that correction over the last couple of years, but the time development was enough. It could allow it to do another push. And because of the way this pulled back in here, it does have the room that it could go further, and it might try to break past that 2T point just because the momentum picked up here. If I go over, and if the momentum had shifted, that wouldn't be as much the case. You'd be looking more for the pure 2T. So let's go over and look at the Nasdaq chart here. And you can see our Phoenix, the 2A pullback, is doing really well. It's come up, we've got 138.2% move back up here. Its axis actually should be, yeah, 138.2% extension. Here, let me put this as the extension move here, so you can watch that. So you're going to be looking at around the 50% extension is going to be that next main level. But I want to look at the bigger time frame. So I want to go up to not even the daily. I want to go up to weekly. Basically, the chart we were just looking at for the inflation adjusted was a monthly chart. So this is our weekly chart. And what we're looking at on the weekly for our extension now is this point to this point, and then the second move on that two-way pullback right here. So we're right at the 76.4% extension right now, and the momentum is as strong as it was back here going into April, start of May. So pretty good momentum. It might start to shift at this point. What we have to see is, does the momentum continue with the same strength that it is now? And that is what would allow it to be able to do that third push on that inflation adjusted chart. But the main thing we've got to look at is this zone here. So if this starts to shift momentum here, or we see it pull up and kind of change there, we're still looking at basically a steep 2T possibility. It's a steep 2T because the momentum overall is pretty strong. We have a slightly higher high here than over here. So typical 2T, what you would see is it would come up to about here, pull in, go to about there, and then you would see the reversal start to form. And if it's still really sharp and strong momentum, then it might start slowly and then gain momentum. But that's what we would expect that zone there to hold. So it's a little bit stronger than we would usually see for a really strong reaction off of that level. It's more likely that if it tries to hold that zone, it would try to do something like a shallow avalanche to try to get the momentum turning around if it holds. So sometimes that might even go into like a smaller 2T that can kind of shift the momentum. In fact, we'll even see situations where it will go and it will come off of that level. It'll pull back, but it'll only pull back into this S1 zone on the 2T, and then it will try to go and do another 2T or double top. We've seen that over the last couple of days in the Nasdaq on the smaller time frames. Let me see if I can show you guys where some of that happened at. There's one. I might need to go to my tick charts. So here's where actually this over here is a similar zone of where it went a little bit faster. And so when it got to the 100% extension, that was right about here. So it went to that slightly higher high, just like we were seeing on the weekly chart, but then it managed to push past it a little bit. And then it shifted momentum, and that's what kind of brought this in eventually. So that's what that can look like. But the one I want to show you, another example of where this can shift, is kind of had it happening here. Let's see, go down to a smaller chart. I might pull this up on my charts in the room the other day. Show you what we're looking at. I'll see, it was yesterday. So here's one example of where we will get kind of that shift. With this one didn't quite go for a 2T, but you can see how the momentum shifted, and that allowed it to bring in that stronger selling. Even though it had a really steep move up into the highs here, up into this 8,900 zone, that change in the momentum allowed this to turn over overnight. Again, kind of same thing going on here. Here's one of the 2Ts from yesterday. So it came up, it still had a steep move up, and it pulled back into the S1 zone, and then it tried to go for another 2T, but it did it more as like a halfway zone between an avalanche and a double top. But in other cases, this could go and do this. It can come up, shift like that, and do another 2T like that, and you'll see it turn around. So this was one of them from yesterday. I actually got the second move up here. When it did kind of that retest, it was a little closer to a head and shoulders. But that's how we can see some of these turn around, where it's a little bit of a stronger 2T than we would usually like to get a sharp reversal, but it can then shift this momentum to allow some of that stronger selling to come in. So that's something that we could see happening at that 100% extension in the Nasdaq. That's what we're going to watch for, and just see how it comes up into the zone. There was another 2T yesterday too. Let's see if I can Here was the other one right here. And so this one was already starting to change momentum when that 2T happened. So this would kind of be the equivalent of where you might have seen a steep 2T. And then it started to shift here. And we still continue to see a little bit of that shift in momentum to help bring in some of these stronger moves to the downside. Let's go flip on over, and I'm going to show you the inflation adjusted charts for some of these other indices here. So we're going to look at the S&P and Nasdaq, and let's see here. I don't usually use this program much, except for like once a year. Trying to remember which one will pull up my historical inflation adjusted chart. There we go. So here's the Dow. Of course, we have a lot more information on the Dow. This goes back even further. What's beautiful is you look at inflation adjusted charts and look at how pretty these patterns are. So this move up here, way back here, this is really similar to what we're just having happening on the intraday charts on the Nasdaq right now. And it's about like at this point on the Nasdaq, grab that Nasdaq chart again. But it's the same idea. Clear this. Go over. And a bigger time frame. Where did my 1,000 tick go? Probably hiding at the end, right? Yep, here we go. So this move up and pullback is basically the same idea as the one that's happening here. But with momentum, we've got a little bit changes in the momentum. So right now, you know, here's the first kind of pull up, kind of stalled a little bit in there and kind of took off again. So we're right about here on that same similar pattern. And then we had this momentum reversal. But what's interesting about this momentum reversal is that each of these corrections is a little bit more gradual. It's slower. So this has the risk that it could have gone and done a momentum reversal plus at that point. That's a pattern that could have followed there. It ended up going into a beautiful avalanche and pulling right back into that zone of support there. So we have 1, 2, 3, and then this is like the NASDAQ this morning where it pulled down. And then I said, hey, you know, it doesn't quite go for that 1, 2, 3 move. Instead, it has that 2 wave and then it goes for that extra flush. We were talking about this right before our session here because this was something that I was trading. And that chart is the move right here. So what you're looking at is this move is this move. This portion is this portion. And then this flush here is the 2B. So for those of you that were here before we got started, this area in here is the exact same thing that we're seeing over here on the intraday charts. How cool is that? This is what I love about the markets. And this is way back in 1982, 1976. Oh, hey, that's where I was born. So we were all the way back into my childhood, and it's the exact same series of patterns as we just saw here intraday today. So when we look at these inflation adjusted charts and we're looking at, you know, what's going on right now, we're basically seeing the same sort of stuff happening on our intraday charts today, just on this bigger picture. So on the Dow here, what we have is the 2-wave continuation, and it has kind of those 3 pushes, but we're trying to go for that extra push. And it's at that zone of where we look at kind of some of these other impulse moves in the past. We want to look at those comparisons because this is still going to have that same impact as the exhaustion of these previous impulse moves. So this is about the same momentum here. So when we see that coming up into that zone there, it's a really, really strong zone of resistance on the Dow. And of course, we're inflation adjusted. So what we are seeing here is, smaller gaps between those levels. And one of the things that helped time some of these previous corrections in the overall market was not looking at the regular charts of the market, but actually looking at measured moves and extensions based upon these inflation adjusted charts. So when the market corrected back in 2000, it wasn't a huge surprise. We were looking at the inflation adjusted charts back into 2000. And what you can see is that this was that same measured move and that same impulse based upon the same momentum. So back into 2000, I was looking for a correction way back then. And it was because I was looking at inflation adjusted charts and also what was happening on some of the smaller time frames of like daily charts in some of these internet bubble stocks. So we were seeing these patterns that were basically like the Bitcoin over the last couple of years, where you would just kind of surge and then you would collapse. And it's just seeing it happening over and over again on smaller time frames helps you pay attention to see what's going on those larger time frames. So here's kind of a closer look. This is just the last 20 years. And again, here's that correction we saw on the Nasdaq, but this is our Dow. Here's our second correction. Here's the third one here. And again, it's that point of, okay, measured move can serve as some resistance, but if it breaks past that level, there is the possibility we might get that third move. And ever since we went into 2018, the start of 2018, it's what happened next basically just depended upon what kind of reaction we would have momentum-wise to that resistance. So we were actually at a measured move resistance level going into the start of that year, right here. So we were looking at the market to go into a correction at 2018, but the momentum was still pretty strong on these charts, whereas over here, it shifted. We had that slower pullback. Remember when we get a V bottom in the market and then you get your Phoenix, then there's a risk it might not go for a full 100% extension or that the momentum could shift and it could lead to another drop. That's exactly what we saw happening back in here. And if it goes stronger like that, then the correction might be more gradual. It might take something like another 2T or momentum reversal or something like that that could allow for a stronger reversal. But we didn't see that pattern forming yet. We haven't seen any sort of 2T that's offered a confirmation, but we are at a zone where that possibility is looming. So we have to watch out for that potential. I'll show you guys the S&P 500 here and the Russell. And then we'll go into some of these other markets too. So basically we're seeing, a lot of the same sort of thing here. S&P 500 is actually a little bit slower than what we saw in the 90s. So we are seeing a little bit of a shift, but look at this high. When that went into 2000, look at how blatantly obvious that measured move zone is. It's just so clear here. And we were starting to see momentum beginning to shift at that high too. So we've got to watch for the same sort of thing going on over here and the potential that we could be hitting another correction zone here pretty soon. Just be open to the possibility that because of the momentum, it might push and try to do a bigger measured move, which would be that. And that would still be on par with what we could get for the extra push on some of these larger impulse moves. So it's not out of the realm of possibility here. You can kind of see it more on the downside move here. That means you guys, for like longer term stuff, you want to watch what's going on like the weekly charts, watch for momentum to start to shift on those. But as long as it's really steep, what is more likely to happen on the corrections? It's like we talked about earlier. If it goes steep and then starts to correct, you're more likely to see things like a shallow avalanche that could bring in stronger selling. Whereas if it shifts momentum at the high, then it can bring in some stronger selling a little bit more easily. And the more it shifts like that, the easier it is to get the really big sell-off. This was a little tricky right here because even though it did have a pretty good correction there, because this amount of shift here is actually pretty small, it leaves the door open for things like 2Ts or momentum reversals or megaphones. So we didn't really know which way that correction was going to play out. We just knew that it was coming into a correction. A lot of technical analysis is not necessarily putting your mind at this is the pattern that's going to happen, but recognizing, hey, what are the most probable potential patterns that are going to happen now? And as something unfolds, then it will point to, it basically narrows the field. So you might have maybe 4 patterns that are possibilities, like we talked about, it could do momentum reversal, it could have done a megaphone. But then as it starts to play out, that tells you, hey, it's leaning more towards this version instead, and you're basically eliminating the other potential possibilities. Let me do the Russell, and then we're going to flip on over to some of the other markets. Okay. I've never looked at the Russell 2000 on this one, I guess. Let's see, what other ways could this be put in here? Maybe we won't look at the Russell. How does this look? Like I said, I use this site like once a year, literally. Once a year, that's it. Maybe let's try RTY. Let's see if that'll do it. Nope. Nope. Okay, well, I guess it doesn't want us to look at the Russell right now on the historical charts. If one of you guys want to play around with it and let me know what symbol or what keywords it likes to use, let me know, and we'll come back to it. Let's go over, though, to our main charts right now. And I'm going to pull up just the trade station. And get that open. And I'm also going to go and pull up bonds here. We're going to flip some of these charts over. So we'll go look at our larger time frames on bonds. Like I said, I'm on Wi-Fi right now, so things might go a little bit slower than normal. Kind of way at the other end of this funky house. All right, we'll let bonds come up, and I'm going to pull up our gold and oil. Gold. And here, I'll just show you the Russell on the bigger time frame here on their futures quick. And we were talking about this over the last couple of months too, because it's basically that same idea. It had that V pivot, right? And then it was going into this range. So here's like our two-way pullback. And then it came to the upper end of that range. So it was that test of highs that had the highest probability of being able to break. And we've seen that break. But because this is so steep and it had a V bottom, there's a possibility it doesn't go for a full 100% extension on this on the daily time frame. It could fall a little bit short just because of the V bottom and then the Phoenix coming off of that. So if it's more of a rounded low and goes for Phoenix, it's easy to not only do 100%, but even go past 100%. If it's more of a V bottom, then it can shift like what we saw on some of those inflation adjusted charts when they were coming off of the lows. Let's see here. I can actually go back and show you that so you can see that comparison again. So I think it was the Dow we were looking at. That one. So here is the same sort of thing where it goes, it pulls up, but then the momentum can be a little bit slower and you're not, this one did go for that 100%, but you're not as easily guaranteed for it. So notice how close this looks to what we are seeing on the Russell on the daily chart. Basically, you know, we're about here or so on that Russell, on that breakout. I don't remember what the exact chart we were looking at that only went to the 2 waves up, but that's the idea that we're talking about on the Russell there. So this has room to go up, but it can keep going with a little bit of a slower pace. All right, let's see, gold. Still trying to load for me. Might have too many things going on Wi-Fi over here. I'm gonna close down some other stuff. I don't have a booster or anything like that on here yet. I just new year, new house, all kinds of newness going on right now. Close some of these browsers. Okay, so what we're looking at with gold, I'm actually going to go up to a larger time frame. So you guys know I've been pretty bullish on gold over, it's been a while here, but let's go up to, start on the monthly. Let me get these going on the weekly and the daily. Then I'll close some of these other time frames here. What we're seeing here on bonds is basically doing the same type of thing that we were talking about earlier, where I said, you know, it can get that pullback and then go for a 2B and then take off and go to that higher high. That's basically what we're seeing happening here on this monthly time frame of bonds. So this is kind of that shift that's going on after we get extensions. And this usually will go into more of kind of this range type of situation here. So on the monthly charts, what I'm looking for are bonds to kind of start to stabilize and go into more of this congestive pattern, basically play around here over the next 5-10 years or so. We can still see some higher highs, but we'll also start to be more likely to see some stronger pullbacks and some of the stronger corrections set in. So the shift is just starting to take place. And a lot of times this can be considered to be a false first high. So what that will mean is that after that point, you might see momentum start to shift even further. So instead of coming up and fully, you know, coming up to the upper end of a channel that's based like this, what you'll often start to see is that this will be the beginning of a channel and it will start to shift like this. So that's going to be more common here as we look at bonds. And there was another chart that was doing this that we were looking at earlier today, and I can't remember which one it was though. So let's go to the smaller time frame. Here's the weekly. And what we're looking at on this weekly here is a very familiar series of patterns. The Phoenix to the 1, 2, 3 to what comes next, you guys? Phoenix 1, 2, 3, then what? Exactly, widening up. And we don't know exactly how a market will take a widening up point of view. But what we do know is that if this goes and does the Phoenix 1, 2, 3, there's a better chance that things will start to widen up. And that's where, when we're looking at the Nasdaq on those inflation adjusted charts, it did the Phoenix, the tilted Phoenix and the 1, 2, 3, but then it kind of shifted again the same amount of time and was trying to go for that next move. So that's where it could do that 2T and then go into a bigger widen up. Just reading through your guys' questions here quick. Right, so at this point, this can go, it's kind of done, that sort of shift like that. So it can go and do a 2T where it can go and do that, increasing with momentum, coming into that previous high, and even going for that slightly higher high, just like we've talked about a couple of times already here today. So that can come up into there before it does a bigger correction. If it doesn't start to gain momentum on that upside move though, and let's say it starts to just hang out here, then it could be more likely to do like a shallow avalanche. I think that is not quite as likely though as coming up and pulling back up again. I think that's going to be our best bet at this point, because even though this pullback is slower than the upside move, it's still a pretty fast pullback. So it's also the second test of the resistance here. So the first time we did see that shallow move, here was the Phoenix 1, 2, 3. So it started out, kind of went for that shallow avalanche and gained momentum. Second time around, not as likely to repeat it to the same extent. Even if it did a shallow avalanche, it would be more likely to do it with a slower avalanche and slower move than it did over here. So more probable that we would see that try to come back up here. So that's what I'm going to be watching on the weekly time frame, but you're going to want to watch that smaller time frame on the daily charts for clues for momentum shifting. So here is the smaller time frame, and so far momentum on the upside has been pretty decent. So here's the two-way pullback, and it's still kind of trying to shift momentum. So we'll often see things like inverse head and shoulders or 2Bs or things like that that can try to bring this up. Now it could still take, going well into the later part of spring for that to make it back up there, but so far it's still holding with that possibility. What we would likely see if this were to shift and go into a shallow avalanche is we would see that happening about here or here, where what would happen is it would pull up, but it wouldn't be able to push past this zone. So this is going to be a major resistance level here on the bonds. If it can push through that zone, especially if it hits it pretty quickly, then that move to that higher high is going to be a lot more simple. If it does run into an issue though, when it comes up to that level, it's basically oftentimes like a measured move like this, then it can shift at that level. And this would be the first zone that you would see a shallow avalanche go, because it's about a 1-to-1 ratio for time development. But the second point would be here, where it's about a 2-to-1 ratio for time development. So those are going to be kind of your two main time frames to look for a reversal again. If it tries to go before that, it's more likely to just go into whiplash choppiness on the daily chart and just be a mess on the weekly time frame too, and you won't see very good follow through on your setups. But if it can make it with a trend up to there, then if it's strong enough, it can still make it higher. But that's a zone where you'd also want to watch where if it does roll over, it could go and bring it back down to this low again. So that's what I'm going to be watching here on bonds. Let's see if our gold is kind enough to have pulled up now. Need to go up to our larger time frames, not just a 60-minute, but monthly, weekly, and daily. So like I said, I've been pretty bullish on gold, and it has a lot to do with that same concept that we've been talking about, where it had the really strong move, pulled back, and then shifted momentum. So we had this inverse head and shoulders happening here. Nice two-way pullback, popped on up, shifted the momentum. So this has allowed for this strength here that we've seen so far throughout 2019 and the continuation. So again, this is something, as long as the momentum holds up, it can actually make it back up to here. It can make it to higher highs. We just have to keep an eye on this momentum. So if it starts to do something like a shift here, how does that shift happen? If that shift happens where it has like a slower pullback, then it could just be a tilted continuation. But if it does it where it's more of the V type of shifts, that's going to be more likely to bring this down and allow it to break to the downside more quickly. So that's where I would start to get concerned. Basically, if it starts pulling off of resistance levels with stronger momentum, not just one time, but if it does it twice in a row. So it can still do it once where it has more of a price correction, and then the next one is a time correction, and still be able to keep going on the upside. So basically what I'm looking for is that series of Phoenix to 1, 2, 3, to then trying to push up into that level again. So this is what I'm expecting on the monthly time frame of gold. This is going to be the main pattern that I'm going to be looking for over the next number of years here. Hold on just one second, you guys. So again, the series is going to be this inverse head and shoulders. So 1, 2, 3, to then the rounding off. And that again can go to the slightly higher highs. And this is where we are at on the Nasdaq too. So we're right about here in that series. So it's, how can that push to that extra kind of third move? So it had the same amount of time development in the Nasdaq, and it's right at a measured move level. So we could come into and do that 2T, but it could still push up a little bit more and turn over. So let's flip on over here and look at oil next. Bring up some of these larger time frames again on oil here, monthly, weekly, and daily is already up. So this past year in oil, what we were looking at was how this had that tilted Phoenix pulled back really sharply and then was kind of basing along here. So this had the possibility that this could have gone for like a 2B or a double bottom, but it needed to do it in this zone, and it just couldn't offer that confirmation. It ended up holding there. So what it's doing is it's shifting to the point where it's treating this more like a Phoenix than paying attention to that momentum shift like that. So this is looking like you've got that same pattern up, which is kind of interesting because it's really similar to what we saw happening on gold on that larger time frame on the monthly here. Oops, got that wrong tool. Right in here, I'm going to clear this. And we'll make this smaller so we can kind of put this above here. So you kind of got the same thing going on with the way this pulled back and then kind of that shift there. Notice it's very similar to the inverse head and shoulders that we saw on gold. But this is a daily chart on oil versus the monthly chart on gold. And usually gold and oil, they trade inversely of each other. It doesn't always happen, but usually. So it's kind of interesting that we are seeing these both favoring the same direction, but this is only on a daily time frame. So this daily time frame right now, I'm looking for this to have a good potential to continue based upon how it's starting. So the question is, does this go into a tilted phoenix and manage to do a 1, 2, 3 over here and then shift again? I think that's a possibility. Right now we are at kind of a measured move zone. So a little bit of initial resistance, but there's still some wiggle room into here. It's just not that difficult for this to try to still continue because of this rounding off here. And then it didn't go at the do or die point, which was here. So do or die point for this to try to break down would have been at this level. Let's go up to the larger time frame on this. War should do a good job of pumping up oil. Well, yeah, that could do it. So here's our monthly time frame on oil. And what we are seeing here is that, you know, this is still holding off of this zone of support here and really not much of a correction compared to the drop. So it's really easy for this to try to go and do another move up too. So oil in 2020 could have a pretty good uptrend. There's nothing to suggest that it's really bearish or that we would see the bears coming in because we only have one move up off of that 2018 low. So it's trying to go and do that second move up and can easily take a year to do that move. So, and still hold in this range. In fact, this could go in and this could even go and do an inverse head and shoulders type of pattern here where this is the shoulder, this is the head, and then tries to go for a shoulder over here and still holds up and comes back into this resistance. So it's not as strong as what we saw in gold on the monthly time frame, but it still has that possibility based upon where we're at right now because this did that shifting again. So remember, right at the beginning of our class, I said the strong drop, it tries to go for a 1, 2, 3, but it doesn't do that measured move. Instead, the momentum shifts. That's what happened here. So it did the two-way continuation. And this is where I said, hey, it can go for another test. This could have gone for a 2B here, just like what we saw on the Nasdaq this morning. I think I closed my Nasdaq chart. Well, nope, here's one. So I can show you again for those that came in a little bit late. I hope this one's Nasdaq and the other ones are bonds. I don't know, this is weird. Oh, I see what's happening. I labeled my tabs. Hold on. We'll turn this over to Nasdaq. So what we were looking at the Nasdaq this morning, though, I was telling you guys, you know, I bought that Phoenix. Actually, you know what? I can pull it up here in League of Traders. Look at that. See this right here? That's exactly what we had going on here at this low. It's just that this went for a 2B. So this is exactly the same type of thing again. So if it doesn't go for a 1, 2, 3, and instead the momentum shifts. So I bought it originally here, but it wasn't as perfect of a 2B as this one was. And this still didn't continue. So we often will get that extra flush here. So it kind of goes for that third move. So 1, 2, and 3, 1, 2, 3. And this one just didn't go for that extra 2B like we saw this morning. So this little portion here, that could have happened right here. But that, if that had happened, it would have turned it around more easily than it did. Since it didn't have that extra flush, it actually had a little bit of a harder time turning around. So when it got up to this level, which is the equivalent of right here, it just wasn't able to push to the extent that the Nasdaq did this morning. But again, this is wave 2, so we still have that room for this to pull. Richard says, he thinks that oil has a Trump put on due to his influence on the Saudis. He's consistently stated he wants to keep oil prices low or have them stay low. Yeah, politics definitely come into play when we're looking at oil. So even this push here, though, it's not a guarantee that this can keep going. It's just more of a two-wave move here. So he might not be able to keep it down, but we'll see here. Let's see, some of the other markets I want to look at. We want to go and look at some of the individual stocks and also our Forex pairs. Like I said, this class might go a little bit over here today. Let's start with, we'll look at some of our Forex pairs. Get some of these loaded here. We'll do our euro dollar. And next we go specifically into Forex and do those in a little bit more detail. And do a little bit of a faster session on the overall market. Get some of these loaded here. So our euro dollar here, this is our monthly time frame. And what we're seeing is, you know, some of those other ones, it tried to do like the 1, 2, 3, like I said, it would come down here and then, you know, kind of shift and pull back up. We just didn't see this end up trying to do that next wave down on this monthly time frame. And so when this popped, what we had was the potential that this could do a two-wave move back down into the lows, that this would be basically a tilted avalanche to bring it back down to the lows. But when it got to that do or die point, it just couldn't do it. It couldn't offer that confirmation. And we saw things shift on smaller time frames where it basically did that same thing, where instead of doing the two-wave move down, it shifted. It had that two, kind of went for that extra move, and is holding up. So where this is now, this is actually showing that it still has room that this can continue to turn around here into 2020. Let's go down to a smaller time frame. This is again our monthly. Here is our weekly. So what we would need to see for that confirmation, again, it goes fast, but then it can't go fast on the continuation, it shifts. So this 2B right here is basically like what we saw on the Nasdaq this morning. So the question is, can this gain that momentum like we saw the Nasdaq do and hold up, or is it going to shift and be able to come back down again? Even if it comes back down again, because of the way it's shifting in here, let's clear this. Even if it manages to come back down, it could still do another 2B. So it's going to be harder for it to still do that extra move down. But what I wanted to see for this to bounce was for it to go a little bit faster. So the Nasdaq had a pretty fast continuation. Show you that Nasdaq comparison again here. See how this came off of that low really quickly? We didn't get that confirmation at the end of last year. And I know I've talked about this a couple of times over the last quarter, but what we wanted to see for this to have that really strong turnaround was to offer a confirmation where it would go more with like even like a 1, 2, 3 and come up, so that this two-wave move is very similar to what happened over here, that it would actually allow that to keep going. And it just didn't do that. It pulled back too quickly and too far to offer that. So we're at a level here where it is a do or die point, where it's easier for this to react again and still try to round off the lows again, even though the bigger time frame chart is very similar to many of those that go and gain that momentum. So we'll have to watch this in here and see if it can do something like a shallow Phoenix here to try to bring that in, but it's not the best placement. It did try to slow too soon compared to what we would like. Even if it's a shallow Phoenix, it would have been better if it had done it right here. You know, come up to that level and then done the shallow Phoenix to go. That would have been stronger for the euro dollar, and it's just not offering that confirmation that we were hoping for, you know, going into the end of the summer and to the start of fall. So a little bit more risk on it, possibility is still there, but pulls down strong at all off of this level, it's more likely to be able to go and do that lower low here. On the loonie, here's our monthly on our loonie. So here's kind of that same thing here. So see how this pulled down sharply, right? And then it shifted. So it did the 2B here. So it kind of offered the continuation, and then it did the 2B, but then it pulled up. So see how it had that stronger pull back into the start of where that kind of 2B portion happened? That allowed it to get going. And this is where the euro is lacking right now. It made it only up to about the equivalent of right here before it tried to pull back and do kind of that move. So it's looking more like that at that point. So it's not as strong. If it had done that move where it pulled up and confirmed, we would be looking at a couple of really strong years coming ahead in the euro, and it's just not doing that. Of course, we've got all the Brexit stuff going on, and you know, kind of, you know, thoughts on where the exit was going to happen with the current election. Now it's going to looks like it's pushing forward pretty easily, but that was probably something that held things down a little bit at the end of the year. And now it's just not giving that confirmation. So on the US Canadian dollar here, we've got that two-way pullback again, pulls back up. So timing wise, we're at a do or die point for this to hold and try to pull up again. And it's just not giving us that confirmation for that. So what we're seeing on the smaller time frames is that the momentum is just not shifting enough to give us that shoulder to bring that up here. So instead, it's aiming more like a shallow avalanche, and it's actually looking like something where we could flush down here before it tries to react and bounce again. So I wouldn't be surprised if we see this flush over this year with the loonie. It just can't get that smaller momentum shift. So it pulled back sharp, pretty good bounce, but now it's a slower bounce. True, sometimes this can change and shift and change the momentum again, but it's unlikely right now. It's more likely that we're going to see it try to gain momentum. And again, we didn't know which way that would play out when this came back into this, you know, this earlier high zone here, because it could have played out with a number of ways to shift the momentum. The best way to get an inverse head and shoulders would have been if it held here and went into a correction right there. That would have been the strongest for an inverse head and shoulders, but it kind of pushed a little bit further, and that's what allowed this shift in momentum to start to come in here. So it's going to be harder for the bulls here this year on the loonie. Our yen also is kind of going past these kind of key points for the bulls. We've been having a really tricky time with the yen over the last couple of years because it hasn't had a strong pattern. I'm calling you a loonie, Nicole. Nicole's like, who are you calling a loonie? Nicole's one of our Canadians. Or what is it, Canucks? Is that another term for it? Canucks. Did I even pronounce that correctly? I have no idea. I read it, but I don't. You'll work on it. Okay. She'll help me out with that. So when we're looking at our dollar yen here, we've been kind of struggling to get a grasp onto where this was going to go to, because it kind of had that little bit of that inverse head and shoulders move trying to get going. But again, it didn't have the momentum here on what we would have needed for that shoulder. So it pulled down. And that's what our our Canadian dollar has the potential to do, is to pull down again like that. So really, for this to have pulled up more, I would have liked to seen that do that faster. And it's just not doing it. So I'm not as sure on the dollar yen, and I haven't been as sure over the last couple of years. I've been kind of like, it could do this, but it's not awesome. And we're still seeing that. But what we are seeing is that this is narrowing. And my guess is the volume is dropping off too. I don't have volume on here right now. But my guess is it's getting to a point where we're going to see a push out of this. But what it could do is give us a false break one way and go the other way, or a false break down and could go the other way. It's more likely less to do a false break down and go up. It's more likely if it does a false break up that it could go down. But I don't have a strong feel on this one. I don't have a strong grasp on it. So what you've got to do is just focus on what's going on that smaller time frame. So here's where things kind of went awry on being able to get that bullish side. And we talked about this a couple years ago, back when this was happening. It had the two-wave move down, but it couldn't do that right shoulder. And instead, it did this really like steep momentum reversal and turned and fell. And that kind of threw things here for a little while, where we had a two-wave move down, but it's kind of shifting, and now it's kind of shifting again. So we got a flush, but it's not really a good setup for a flush. So just play the smaller time frames and not worry as much on the bigger time frames on this right now. Here's the daily on here. So daily, you can see we're getting some good setups. This was a nice little inverse head and shoulders here, but it just couldn't follow through that well. So we had basically the three highs, tried to hit it again, it's falling. This is something where we could get a 1, 2, 3, but it could also do that same thing where it doesn't go for the 1, 2, 3. It tries to go for 1, 2, 3, but then it shifts momentum. And if it does a two-wave move down, it could do that extra flush and then turn back around. And that's what I think has a really good probability right now on this daily chart. I think that that is the most likely pattern to happen right now on this daily chart, is that it will try to go for 1, 2, 3, but it can't really offer the confirmation and would instead shift, just like what we saw again this morning on the Nasdaq. But that's just playing the smaller time frame. And that also means that that would lead to a much choppier next couple of months too. And it doesn't do anything to solve the mess that's happening on the weekly and monthly time frame, because even that pattern still keeps it within that bigger congestion. But that is just our most likely daily pattern. Now let's look at a couple of individual stocks, and we'll go into more of these Forex pairs here next week as well. But let's look at some of the individual ones right here. So let's see, you guys want to look at BIIB. And RAD. What other ones would you want to see? PayPal. Get those all loading. Amazon. Okay, we'll pull up Amazon too. Let's see if these are going to load for me here. This is where I usually use TradeStation because TradeStation is usually faster with pulling up individual stocks. Because I don't trade them on NinjaTrader, I trade them on TradeStation on my other computer. So I don't have anything queued really. Let's go and flip over to that TradeStation actually. Be faster to get them to load there. I'll just close this down. Open that back up. So what we're looking at here is, the same kind of blow off top type of thing we ran into. And then it shifted. So when we talked about how that could do that measured move like that and then turn back around on some of the other things that we looked at here today, this is an example of what that would look like. So this is how something that can go for like that shift and turn around and bring it and kind of keep going and go for that extra high. This is what it would look like when that fails. So it's basically when it gets to almost that measured move like that, that's that key point. So the ones that will keep going, they'll push through here. They'll basically do a 1, 2, 3 at that point, and that's what will get it to a higher high. So if it pulls back more than basically a quarter or a third of this upside, that's what nullifies that potential. Then it's more likely to do an extra flush and kind of keep going. So if it tries to go and bounce again, it's more difficult to actually get off the ground and you don't see it push to that higher high. So that's a really good example of that here. Now, right now we're at a tricky level. There's not a clear pattern on this at this point. The most likely thing is that this is the first low, this is the second low, and it will try to turn around and do that bigger pattern on a bigger scale. So it still has the room now that this can try to go and treat this, similar to what a Phoenix would look like, and can go and gain that move. But to go really fast right here, that wouldn't be as ideal. It would be better if it kind of played around a little bit and then got going. So tries to pop back up here. The main risk is it might go and do like a megaphone and kind of come back down again. This is also a situation where we get the ones that will try to go for 1, 2, 3, but then the momentum will shift. And just like we saw happening on the lows when they were coming into doing that, trying to go for a 1, 2, 3 on the low, but then it would just do like a 2 wave and shift the momentum and then flip and turn around. It could do the reverse here on that one. So that's something that you're going to want to be aware of, especially when something gaps like this did. That when it tries to do that continuation, that it might do a shift with that continuation. So it's really struggling here with the bulls. I don't see a really good pattern for it yet. I do think there's room for it to push higher, but there's not really a strong pattern for it yet. In fact, this is a pretty strong drop here. We will get, sometimes we'll have a stronger drop into this zone, and it will hold like fan levels and things like that and still manage to bounce and react off of it, kind of do a little pause and then get going. That would be the best case scenario for this, is if that can do that, where I would like to see it actually flush a little bit more to do that, because kind of pull some of those people out, pop back up, little tiny pause, and then keep going. Really similar to what was happening on that daily chart on the Russell. That would get that to pull back up there. But on that bigger time frame, you then have to watch out for, as it comes back up into that previous high zone, it doesn't do a full 1, 2, 3 like this, but rather kind of shifts. That's what I think is very probable on this one. On RAD, you can see basically the inverse of what we were just talking about. So this is what the Nasdaq did intraday on that monthly basically a more pushed down version of it. So see how it tried to do the continuation, shift, did that extra push and popped. Exact same thing here, just way more extended on that first shift. We are dealing with a security where it can kind of do like these little pops out of nowhere and then kind of die again. That's the main risk that you run into on something like Rite Aid, is it can do like a short little reprieve and then it might die again. But we also see situations where they can come all the way back up. So it's not something where this is necessarily going to collapse again, because it does have really strong support at that previous low. It does have that momentum shift, and the momentum is really strong off that low. What did we talk about though with the euro dollar? Guys, remember when the euro dollar did that shift, what did we want to see? Right, I wanted to see that push come back up into the zone of where that momentum first started to shift, and ideally a little bit above, so it would come back up into this zone. So if Rite Aid keeps pushing and makes it to that level before it corrects, even if it does a deep correction at that point, it's still more likely to then go into a bigger uptrend. But it has to get to that upper level first. Otherwise, it's going to be running into the same problem that we're running into on the euro dollar, where it could do a two-wave move like that and then still falter again. And one of the risks that we are seeing with that potential is that when this pulled up here, it's pulled back about 50%. And ideally, it would have kept pushing up into that level there, and then it could pull back and still work and keep going. But you want to see it get to that level first. And that's where it is struggling. So this here on the smaller time frame on the intraday chart, it could still do a reaction off of that, but because it pulled back 50%, it's harder to make it up to that upper level. So smaller term, you might see some buy setups, but it's going to be trickier. And you can see it's struggling in here. And this still looks like it could do a really messed up Phoenix. It's at that do or die point. So you got your two-wave down, you got your two-wave correction. So it's kind of at that do or die point where this could go and come back up. But trying to sustain the move is going to be where it's going to run into trouble. On Peloton, and Peloton did that retracement too, where it pulled back. Just like we saw on Rite Aid. Had a nice little 2B here. It's a good zone. I don't see anything that I would do with this right now. Since it's more of a newer chart, we don't have a lot of data back behind this, but the way that it's holding up, this could go into a bigger kind of Phoenix type of formation, since it is reacting with a pretty good V here. It's kind of started with this rounding up and shot out. It's how does this play out here is going to be the big thing. Does it go and manage to make it up more than 50% back up to that previous high? Then it can do a two-wave and actually be able to keep going, even if it tries to, kind of shift like that. That will keep it going. But it has to get past the 50% here on this drop, and it needs to do it without stalling. So it needs to have a really steady trend up through that 50% level. If it can't do that, then there's a greater probability that this would shift and come back down into this zone. And then the next shot would be looking for something like a 2B at that zone. So right now, I mean, nothing for like a new setup in here, but what we just saw is what I would want to watch for on the daily chart there. Intraday has a little bit more room before it hits a measured move. So there's still a little bit more room on this daily that it could push a little bit more. But can it do it with only having then going into a correction that would be more of a time correction? You don't want to get the price correction at that 50%. You want to get more of a time correction and push it, and only a short time correction, and then still be able to push it through that 50% retracement of this. Let's see, Yeti. Another newer one. Here. 5 minute. Oops, where did my weekly go? I hit it. Okay, we'll make this one a weekly. Whoops. This looks a lot like the Nasdaq did on the bigger time frame here as we were talking about stuff this last year. So you've got the two highs that are really clear. So a lot of times this might go up for the third high and turn around. But since it's only the first move up, it has a greater chance that it could actually push through there. So it's kind of an iffy one here at this point. It's still looking pretty good for the bulls the way it's playing out right now, even though we've got a momentum shift like this here happening. Because it's a newer uptrend, it's easier for this to kind of push through it. And let me show you what we're talking about on that Nasdaq comparison. Let me see. Do I have, maybe I don't have another, close that other Nasdaq chart. So I'm gonna pull up the QQQ here. So it's basically what we were looking at right here on that. So this is like your first pullback here and your second pullback here. And clear these. So you got your first pullback. It didn't really go much for the second pullback, and then it kind of shifted, and this one managed to make it higher. But when we were watching the Nasdaq at that point, it kind of had a do or die point where if it tried to do like this, basically a little two wave in here, pulls back up, that's your do or die point. So that's the point that it could go and turn around. So right now, it still looks like it's going to push higher. Basically, if you're doing a wave count on this, I'm counting this is wave one, this is wave two on the upside, this is wave one of correction, this would be wave two of a correction, and then it could go and do another two wave move, come up to that point, and that's your do or die point on that thing. So that was happening in here on the Nasdaq, and it managed to push through it. Since it's the first correction on this, it has a better chance that it might push through it, but we don't know until it really offers that confirmation with the momentum there. I wouldn't be too excited on the bearish side of this though. I think your bearish pullbacks right now, it's more of like a shorter term swing trade type of move. Maybe look for things on the day trade side of thing, but not really an investment type of move on the downside. Let's see, IWM. This is our Russell here. So basically the stuff we talked about on the Russell earlier, that's all applying here. So what we're going to be looking at again is that previous high zone, but it could still keep going and pushing through that a little bit before we get a bigger correction. So I would expect it to kind of, maybe chop around a little bit more, but there's a good reason to believe that this is going to make it to that upper side. When we talked about the way that this is offering that break on the upper side, it had the V bottom. So when you're looking at that Phoenix potential, a lot of times it will have a slower start and it can risk doing a shallower move and turning around. We're not seeing enough of a shallow move to turn around though, so it might be something that just has like an overall slower trend and still manages to go up. But it is holding up pretty well, and it does show that the probability is that it's going to make it back up there. So shorter term correction like this could just be like a tilted phoenix. I don't trade the ETF on the Russell much. I just stick to the straight futures. It's not as choppy on the futures. Apple. Apple is just basically doing this blow away top. So again, this is something where this could easily still keep pushing. A smaller little correction could lead to some flushing, but to get a bigger turnaround, it more likely, chop around before it really turned. So I don't see anything that is stopping this quite yet. We are seeing where it could have done a 2T, but the momentum was just too strong. So when it went to the second high on that 2T potential on the monthly time frame, can't see it here on the daily. Let's see on the weekly here. It had the potential to do a 2T here, right there. But that was the do or die point, and it pushed past it. And that's what the Nasdaq did last night too. So the Nasdaq did that same thing into the end of the day yesterday, where it got to a point where it could have done a 2T and then it pushed through it. So let me show you that Nasdaq yesterday so you guys see what I'm talking about. I don't know if I'll see it on the QQQ or not. I haven't traded the QQQ in a while either. Let's see. Yeah, kind of. So what we're looking at here is this was the point where it could have done like the 2T type of move, and then it pushed through it. And that's what Apple is trying to do right now, kind of push through it. Now this collapsed overnight, but it still had strength before that. We'd really have to look at the futures again to make a better comparison there. There's no way I would probably do any like additional investing in Apple right now unless you've already just been kind of like incrementally adding in the trend. It's not something I would get into a new trade here. It's just too easy for this to have like a wipeout type of move like this, where you get some of those deeper flushes happening. So, Apple for me is kind of like a wait and see type of thing at this point, because it is at a level that it could be like what the Nasdaq was overnight, the futures market in the Nasdaq. Tesla. Is Tesla ever going to stop going back up? Let's put that on the monthly. So what we've got on Tesla is really similar to what we were looking at as some of those IPOs where they had popped and pulled back, and then they had that potential. So right now is a key level for Tesla, because as far as doing a tilted Phoenix type of move, it's at that do or die point for confirmation on it. So the interesting thing on this as a tilted Phoenix on the monthly time frame is it started with a time correction and then went to a price correction. The most predictable ones are the ones that are reverse, where they start with a time correction and then go through a price correction. Or sorry, start with a price correction and then go through a time correction. So they'll go like this. Those are the ones that you're most likely to get a measured move, like that to that. But you still have to watch them where they're right at that 100% here to here as a resistance level. So a little bit tricky to say, you know, can this go and keep breaking it? It's a do or die point, but it certainly could keep doing it. But I've seen many of them that will just kind of slide up here a little bit and then collapse again. So what is most likely to happen on Tesla here is it's more likely to go into a chopping thing, kind of stay at that upper end of that range, and then it's going to have a greater risk that it could do another flush. So chopping basically throughout the year would be the most probable thing on Tesla. Netflix. We've seen a lot of that have done this. I mean, that goes back to a lot of the stuff that we've talked about, you know, where you got the two lows. So can this go and kind of shift and allow that to pull back up there like that? It really pulled more than the 50%. When it bounced off of that, it made it more than 50% of the way back up. So that is a positive for the bulls, because it does mean that later on it can have a greater potential to still be able to break through that, because it did it with a one solid swing move. It wasn't something that went into a 2T. So if it had gone into a 2T here, it would have been easier for it to pull back. And the momentum on this move is still more than 50%, which means even if it tries to come back down again, that level is going to be a support level where it can still bounce off of it and can still try to turn around and pull back up. So right now on Netflix, there's not really anything that's going to give a strong sell signal. Alan Farley has a pattern that he calls a Hell's Triangle. That will happen like this. It'll kind of have more like lows that are comparable and still be able to break down. But the problem is I've seen that Hell's Triangle fail a lot and actually still continue and break to the upside. So it's not as probable of a setup for the bears. What we would need to see for this to come back in and bring in more of a bearish side of things is really something that would kind of shift momentum like this, where it would really be struggling on the upside, and even then probably doing more traps on the upside before it finally turned. So right now, I would hold on the bullish side of this, just the way that this is holding out. If it had had more of a shallower correction, hadn't pulled up more than 50%, it could have done that two-wave, 1-2 like that we've talked about, done more like a 2B, and then popped at that level. But it pulled back up more than 50% here. And so that's kind of like that key threshold that by going up more than 50%, it's less likely to do that pattern that would get that bounce in there. So it's going to be a harder one to trade at this point, basically, for new setups. Amazon. All right. Amazon will be our last one here, and then we'll pick up next week where we will, well, did I do PayPal? Maybe I didn't look at PayPal. I promised you guys PayPal, so we'll do PayPal here too. Amazon still has that potential for the 2T, because see how it didn't pull back more than 50% here? So it could still do the 2T, but it could do it where, you know, instead of getting that 1, 2, 3, it might do it where it does that slower that we were just talking about, that we kind of saw in reverse on the Nasdaq this morning. So that could happen here. So PayPal. Oops, wrong screen. Got to type on the right one. Thank you for reminding me of that. So what you can see on PayPal is that when it tried to do its continuation here, it didn't fully hit the bigger extension and kind of ended up going into a correction here. So usually this will go into a choppier back and forth move on the monthly time frame with this pattern. Let's go look at it on the weekly. Everything just ends up all over the place here. Oh, that Tesla on the daily also. Notice the pattern here on the weekly chart. Phoenix, 1, 2, 3, widening up zone. Okay, so weekly, see here's that shift. Here's how it pops, but it's stalling at just that measured move zone. So it makes it harder to really do that continued push to get to that higher high because it's kind of stalling a little bit too much. But it didn't really pull back too much yet on the weekly. Let's go look at the daily. Daily here. So this is kind of midway between definitive one way and definitive the other. Here's that inverse head and shoulders type of zone. And so what you would want to see is you'd want to see this doing a little bit more stronger confirmation here. And it does have that potential. It's holding up pretty well. Here's that shift that we were talking about earlier. So it's holding it pretty well, but it is at a do or die point. It needs to pick up like right away in order to be able to make it back up to that upper side. You can kind of see that with that spacing there too. It's at a spacing point where it has to gain that momentum. So if it goes out further here or has a flush here, it's going to be harder for that to bring in that momentum later again. So it's going to be more of a struggle for the bulls on this one. There's a greater risk we can have that bringing in that second wave of correction here on the monthly. And basically what that will do is a lot of times that will look like a megaphone on the bigger chart. So it'll look like this. This isn't the perfect version of one, but we will see them go like this, and that will bring them back down again. So you can see that it's really at that key area here. It needs to gain that momentum. All right, gang. So that is it for today. I kept you much, much longer than normal. What we're going to do next week is we're going to do a focus that's going to be more on the Forex. So we're going to go through a lot of the other Forex pairs. And I can also look at more of the individual stocks next week too. So we can kind of keep going with this kind of bigger picture outlook here next week also. And I got my YouTube fixed. So I'll be posting this back up on YouTube here today too. You can also go back and watch the session from a couple of weeks ago, right before our Xmas break. I have that one up there as well now too. So you guys have a wonderful weekend and get out there and make this an awesome decade. So great time for some fresh starts. If you're not doing your trading journal, start that now. Keep it simple, guys. Keep it simple so that you're actually keep up with it. All right. Happy New Year, everyone.